AM 560, The Answer.
The content and information on Real Estate Airwaves is for informational purposes only and should not be regarded as legal advice. Real Estate Airwaves does not provide legal advice and make no warranty or representation regarding the information on the show. Real Estate Airwaves shall not assume any liability for damages of any kind whatsoever relating to the use, misuse, or reliance of this information. The listener should conduct their own investigations, analysis, due diligence, draw their own conclusions, and make their own decisions. Any areas concerning taxes or specific legal or technical questions should be referred to lawyers, accountants, consultants, brokers, or other professionals licensed, qualified, or authorized to render such advice.
No fluff, no hype, no gurus. You're listening to Real Estate Airwaves on AM 560, The Answer. Get the inside information you need to find, fund, fix, and flip real estate in today's market. Joshua Ingalls and Vincent Pace share their secrets to minimize risk, maximize profit, and get deals done. We're pulling the curtain back and sharing the knowledge you need to succeed in real estate. And now, your hosts, Joshua and Vincent.
Thanks for joining us. Today we are going to be talking about how to get institutional capital from banks and hard money lenders. My name is Joshua Ingalls. I'm an active real estate investor. Over the last 3 years, I flipped over 60 fix and flip deals. I'm also an active real estate broker with United Real Estate Chicago.
And I'm Vincent Pace. I head up Barnett Real Estate Investment Finance, and we're a hard money lender. We provide capital to your deals.
The money man.
The money man.
So there are two different types of institutional capital providers that you can use to do real estate deals. Number one, of course, is banks. And banks are in the business of lending money. They take money from deposits and they pay people less than 1% in interest, and then they re-lend that money out and leverage it out and lend it out at 4, 5, 6, 7% in the form of mortgages. And then, of course, there are also hard money lenders.
And so, you know, the first question you might just want to ask is, well, what is a hard money lender? And it's kind of an amorphous sort of definition, but it's basically any lender in real estate pretty much that's lending that isn't a bank, really. It's basically a non-bank lender in the real estate space.
Yeah, so there's a lot of differences, of course, between banks and hard money lenders. So we want to cover some things you should be aware of when you're talking to banks and when you're talking to hard money lenders. Number one is the speed. A lot of times when we're putting a property under contract, the seller wants you to close because most of our marketing says, hey, we can close in 15 days. Or we can close, I've seen some marketing out there that says we can close in 7 days. I have not met a institutional lender that can close is that quick, whereas a hard money lender can close very quickly once you go through their approval process.
Yeah, banks will often take, you're probably talking about months, 2-3 months minimum with a bank to close on a typical loan, whereas, hard money lenders can close in as little as a number of days. Our fastest loan ever closed was 2 days. That was extremely exceptional. We had a borrower who was very responsive, an appraiser who was able to jump on it immediately, and just everything kind of fell into place. More typically, if you give us a week, 5 business days, let's say, that's pretty easy for us to get done. So that kind of shows the difference, and that's one of the big reasons why hard money lending is even a business to begin with. If banks could come in and do it this quickly, you wouldn't need these non-bank lenders to come in and do it. There's a gap in the market that's being filled. When you're competing with cash can close immediately. So you need someone who can close on a comparable basis with cash, and that's where hard money lenders find their niche in terms of speed.
And banks will usually take a lot longer too because they're much more heavily regulated industry, like from the government and so on. So they have certain processes that they need to follow each and every loan.
And that gets into the ease of use as well. Banks being regulated, being kind of a core sector in the economy that's looked at very heavily at both the federal and state level, there's a lot of things they have to think about. There's a lot of limitations. There's all sorts of risk factors, concentration risk, and all sorts of things that a hard money lender doesn't necessarily need to look at. So the rules governing hard money lenders are basically the general contract rules, and some states do have licensing requirements, but it's much lighter than banks, which means that generally hard money lenders are just going to be much easier to work with for a variety of reasons beyond speed.
One of the benefits, though, of course, of working with a bank is that your cost of money is going to be much less. I never recommend somebody who's out there going to be borrowing money for a long-term rental property to use a hard money lender unless that hard money lender has a long-term financing program. Usually the hard money loans are for a shorter term and are meant for flipping.
And that perfectly describes our financing programs. We don't have any long-term program. To dig a little more into those numbers, I mean, banks will typically get you, let's say, mid to high single digits, maybe a little higher depending on the program. Whereas hard money lenders, typically the total cost of capital is going to be in the mid to high teens probably. In some cases it can go even higher than that. So you'll save considerable money with a bank if you can get it, and that's always the challenge. It's fairly difficult to obtain bank financing for these kinds of real estate investments. They'll have various requirements such as credit score limitations. Hard money lenders do sometimes also have that. We don't, but others do. So it's something you need to consider on both sides of the hard money bank divide. But you'll find that it's just a lot more difficult, especially as a new investor, to get bank financing. Now, if you're established, if you've been flipping for 5 years and you've done 100 properties, then we're probably talking it's more realistically go see what a bank can get you. What we found is that many of our borrowers, even those who are able to get bank financing, will also often keep our line available because there's going to be times when they need to close on something and the bank just can't get it done in time. Or there's going to be a deal that the bank finds a little too hairy and doesn't want to get involved with. So that raises another common difference between banks and hard money lenders is the construction piece. Banks often struggle with financing construction. Obviously, if you're flipping a home, that's a big deal. You need your construction finance. And if they can't do that for you, it's going to be a challenge. That's also a reason why banks will often struggle to finance at all. They look at a property, they see that it's dilapidated, it needs work, it has all these issues, and they're reluctant to finance that. That's one of the reasons why it becomes more challenging to get bank financing for these kinds of transactions.
Yeah, and keep in mind, too, sometimes when you're purchasing a property, your rehab might be more than your purchase price of a property. I mean, I've bought properties for the low 100s, and I'm spending over $200,000 on the renovation. So if I use a bank just for that purchase piece, I'm going to be struggling to come up with that over $200,000 out of my pocket to fund the construction, whereas hard money lenders are built for that, and they can also finance that construction piece. And of course, you also have to think about your credit score, like Vince said. A lot of banks are going to be looking for at least a 720 score. So if you don't have that, it's going to be difficult to do any sort of investment financing.
Yeah, we don't consider that at all unless you tell us that your exit is going to be refinance the property. And in other words, you're saying a bank's going to take me out, because then we know a bank's going to look at that. So we need to evaluate whether your exit is reasonable given your credit score.
Yeah, and one thing you want to look out for when working with hard money lenders, you really want to be looking for hard money lenders that are brick and mortar businesses, meaning somewhere where you can go in and meet the team, because there are a lot of people out there. I get messages on LinkedIn all the time of so-called hard money lenders, but a lot of them are what I would consider fee collectors.
We in the hard money lending business, we can't stand these guys. These guys are out there in the market. They're finding borrowers and saying, "Hey, you pay me $5,000 or some other ridiculous number up front, and I'll go find you. I'll get you some term sheets, or I'll get you some sort of program." And often the term sheets they come back with are not attractive at all. It might be 30% annualized rate, and that's, double what you can typically get out there in the market. It might be a very low advance rate, and they're really, it's sort of a scammy business, and it kind of gets people turned off to hard money lending altogether, when in fact it's just these bad players out there who are trying to make a business collecting fees and not actually providing financing. Yeah,
I've actually been scammed. When I was first starting out as a real estate investor, one of these people reached out to me, and I thought, hey, this looks like a pretty good deal. They pretty much said I would be approved with a hard money loan. Now, that's without them knowing anything about me. And so it ended up being the loan that they got me approved for was just absolutely ridiculous. I believe the cost was like 9 percentage points and something in over 25% annualized interest. So be very cautious of that and look for those brick and mortar institutions.
The big red flag is going to be large, non-refundable upfront fees. If you see those, be very, very cautious.
The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a lender comparison calculator so you can compare the cost of money. See you at the next segment.
Mortgage rates are still near historic lows. If you're looking to buy your first home, upgrade, downsize, invest, or refinance, contact Matthew Ewald from First Advantage Mortgage, a Draper and Kramer company. Matthew's been a trusted mortgage consultant for over 13 years and has options to fit your unique needs. With 40-plus investors, call Matthew today at 630-376-0484. That's 630-376-0484. Or apply online at mortgagechicagoland.com. Company NMLS 2551, NMLS 198323. Illinois Residential Mortgage Licensee, Equal Housing Lender.
If you want to do real estate deals, you need to learn the systems. Visit fliptoriches.com for info on workshops happening the first Tuesday of every month. Meet me, Joshua Ingalls, and other active real estate investors in the Chicagoland area. We give the most value possible with networking and information for new and seasoned investors. We meet the first Tuesday of every month at 3009 North Kedzie in Chicago at 6 p.m. Check out fliptoriches.com. That's fliptoriches.com for all the info now.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. It's all about making money with real estate. Now, back to Real Estate Airwaves on AM 560, The Answer.
Welcome back. Today we are talking about how to get money to do real estate deals from hard money lenders and conventional financing. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a loan comparison calculator that you can use to compare the cost of money between hard money lenders, or maybe even perhaps a private money lender, a hard money lender, or any variation of that. So there's definitely conventional money is something that you should also look into if you qualify. Conventional money can be very, very cheap. Interest rates have gone up a little bit, but for the most part, interest rates are still at a very, very low rate. When you're talking about loans that homeowners are getting when they buy homes, it's still under 4%. Now, that's very, very cheap money. But the issue is with a lot of these national institutional lenders, so I'm talking about the banks with branches at different corners of intersections, they don't make the decisions there at those branches. A lot of times they have an underwriting division, which might be in Texas, it might be in New York, it might be in Atlanta. It's in places completely different from where you're at. So when you're talking to a loan officer with these national institutions, these are not the decision makers. And there are a lot of restrictions when you're looking to do a conventional loan to purchase something. Most of the time, these banks want the water to be running in the property. And that's difficult when you're buying a foreclosure, because many times when you're buying the foreclosure, these houses are winterized.
They'll often want other things like the appliances installed. So they're much more geared towards houses that are already livable. The the paradigm they have in their mind when they're writing these underwriting guidelines is the homeowner. So when you come to them with a property that's kind of a mess, that's not quite going to fit into the box that they've carved out for their lending program.
Yeah, I've seen where sometimes an investor will literally get the water turned on for a day so that they can be approved for the conventional financing. And when they work with the city to get the water turned on for the day, then there's water leaks going everywhere. So it can be pretty difficult when you're buying dilapidated properties. And that's why actually FHA came out with a program called a 203K loan. Now, what that allows you to do is to buy distressed properties, and they actually do give you money to do the rehab. The issue is that there is a lengthier process in order to get access to that capital. And most contractors that are going to qualify for this 203K loan are going to charge you 2, 3, maybe even 4 times as much as it really costs. I remember my brother, when he bought one of his first house that he moved into, this was before he was really flipping houses or anything like that. We looked back at what he paid for some of the work that was done on the house, and he paid over 4 times what we'd be paying today. So these 203K contractors are going to be charging you a lot more. And again, it is a lengthy process.
It's also, I think, primarily designed for homeowners who are going to buy a home and renovate it to live in. So it's not designed for the investor in mind, which is why it's hard to kind of fit the square peg into the round hole.
Yeah, 203K loans, great point, are meant for owner occupants. And then again, there are local banks, which I recommend if you're going to be trying to get financing for any sort of deals and you want to work with a bank. Local banks are the way to go. They're going to be much more flexible than a national lender. And a great thing to do to really start building rapport with that bank is to simply open up a bank account there.
We've seen this again and again with our borrowers, especially on the long-term refinancing transactions, but also those that are using bank financing typically tend to not be using the big names that you see on every street corner, but rather a local bank that has 4 branches or something like that. They can be a bit more aggressive, they can be a bit more nimble, and they have more flexible policies. You can talk to the person who's ultimately making the decision on your transaction in a lot of cases.
Yeah, usually the smaller the bank is, meaning the less branches that are out there, usually the more flexible they are to work with you, and you can really build that relationship with the person that's going to be doing your loans. Now, when you go into the bank, you're going to want to look for, usually they're a vice president, and most local banks will have 5, 10, 15 vice presidents, but the vice president you're looking for is the VP of commercial lending, or you're looking for a person that does new construction loans. So this is the person that you want to talk to at the bank. You're not looking to talk to the loan officer that does the residential mortgages.
Yeah, and you can imagine if you walk into Citi and ask to talk to this person, you're never going to meet that person. But at the local bank, you have a good shot of it, which allows you to build the rapport and the relationship you need to get the deal done with a bank like that.
Yeah, and what you want to do when you go into the bank is have some sort of portfolio. You don't just want to walk in there empty-handed. You got to present yourself in a very, very professional manner. So have a portfolio maybe of rehabs that you have done in the past, perhaps a list of addresses, pictures of before and afters. They might want a business plan from you as well. And the more information that you bring in with you when you go to meet with these local banks, the more likely that they're going to work with you. But they are going to want to see that you have some sort of experience generally.
And this gets back into what we discussed in the last segment, just the ease of use. Banks are fairly difficult to work with. You might be a new investor and you hear what Josh just said about what you need to bring in. You would say, well, I don't have that. I've only done, I'm on my first flip now, or I haven't even done a flip yet. The unfortunate truth of the matter is that you're probably not going to be able to get the kind of bank financing you would need if that's your situation. Banks need to see sort of a real operator with transactions done, ideally some sort of business history. So it's going to be a little more challenging to get rolling with a bank for someone who's just starting. I'm not really sure where the cutoff would be. I think different banks might have different ones. It might be 10 deals, it might be 15. It's really going to depend bank to bank.
Yeah, the main thing is building that relationship with that decision maker, which is going to give you the edge. But again, they're still going to want to make sure that you have some sort of experience. Now, another thing that you may want to look into, like Vince mentioned earlier, is some of these local banks or even some of the national banks are great resources for you to refinance your properties out. Again, they're not as quick as hard money, but if you're going to hold on to this property for a long-term investment, you definitely need to get that interest rate down, and local banks and large institutional lenders are a good fit for that.
And this is a very common combination, sort of a 1-2 punch that we pull together with these banks. We come in for the short term. We're in there while it's messy. We're in there for the rehab, financing the rehab. We help the borrower purchase it, rehab it, and then hold it for as long as the bank needs to pull their financing together. So that's how our typical buy and hold borrower will work with us. They'll have us on the front end, helping them get the deal done, and then they'll have the bank or some other long-term lender of that nature bring in long-term, lower-cost capital to hold the deal. At which point, the property typically meets all the requirements. It's now finished. It has appliances. It has running water, running electricity. It is completely built and ready for use, and it now fits into the box. At that point, we can get taken out, and the bank comes in.
Yeah, there's a lot of investors out there which do a buy, fix, refinance strategy. So what they do is they use the hard money lender to buy it, then they fix up the house, then they use a conventional bank to not only pay off the hard money lender, but in some cases are even able to pull out equity from that property. So it's a great strategy. And another thing you want to look at is credit unions. These are not good for buying investment properties right off the bat, but they are great for refinancing your rental properties. Because when you join a credit union, it's almost like you're actually part owner of that credit union. And so you want to look into that. There are also, I know a lot of investors that use credit unions to refinance their rental properties as well. And there's credit unions all around, so make sure to check some out and maybe start an account there so you start building that relationship. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a lender comparison calculator. We'll see you at the next segment.
You're an investor, a lender in commercial real estate, or you're an attorney, and you use a title company. National Title Solutions wants a chance to be your title company. Give them a shot at your business, and you'll find out why they're the best choice. Most title companies keep banking hours and have no flexibility. National Title Solutions will do whatever it takes on your timetable. You'll save money, too. Give them an opportunity and see the difference. Convenient offices all over. National Title Solutions. Call 800-NTS-2700. 800-NTS-2700.
This is Joshua Ingalls, broker with United Real Estate and radio show host. When I need to pre-qualify a buyer, I use Matthew Ewald from First Advantage Mortgage, a Draper and Kramer company. I've worked with Matthew for over 2 years, and I highly recommend him to all my clients and investors. Call Matthew Ewald today at 630-376-0484. That's 630-376-0484, or apply online at mortgagechicagoland.com.
Company NMLS 2551, NMLS 198323, Illinois Residential Mortgage Licensee, Equal Housing Lender.
The Chicagoland Real Estate Investment Group invites you to build your network in real estate investing and learn from the region's experts. There's no charge to attend, and there won't be any hard sell for expensive courses. Join us on the fourth Monday each month in the North Shore. For more information, visit us at meetup.com/ChicagolandREI. Again, that's meetup.com/ChicagolandREI. Meetup.com/ChicagolandREI.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim. or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. Now, back to the show that gives you the insider info. Real Estate Airwaves on AM 560, The Answer.
Welcome back. Today we are talking about hard money lending and bank lending. In this segment, we're going to focus on typical hard money loan terms. Now, these terms vary a fair bit around the country. You know, you can be out in California and get something like 10 and 2 pretty commonly. Typical for the Chicago area would be a cost of 13 and 3. Now, what does that mean when I say 13 and 3 or 10 and 2? It means the interest rate is the first number. The interest rate is the 10% or the 13%. And the following number, the 2 or the 3, is points. Points are simply a percentage of the total loan. So if you imagine that the loan is $100,000, 3 points would be $3,000. So it's an additional cost that's tacked onto it.
Now, something you want to look at, too, when you're drawing money for your construction, sometimes some hard money lenders will charge you on 100% of your total amount from day one. Whereas some hard money lenders, like Barnett, for example, they're only charging you interest on money that's actually drawn. So, for example, if I have a $200,000 construction budget, I don't want to be charged for all that $200,000 from day one. I want it to be only charged once that money is drawn.
And you can imagine in the example that, Josh just provided, if you have $200,000 of construction, maybe you have to wait 3 or 4 months for permits. It's not out of the realm of possibility. You do not want to be paying 4 months of interest on $200,000 when you're not even using the money. But it's typical for you to need to do that. We just met with a borrower recently who had a new construction project that he was doing, and he got stuck in permitting, and he was getting charged by his lender on the full amount. And he really took it on the chin with those interest costs because it took, instead of taking 2 months to get his permits, it took 6 or 7. Another common term is going to be the actual term, the length of time you can have the loan out. Typically, you're going to see 9 to 12 months. Sometimes you'll see shorter terms, but we most commonly see 9 to 12 months as the sort of industry norm. To get extensions on those, the most common structure is you pay 1 point for a 3-month extension. So if your total loan is $100,000, you'd pay $1,000 and you get a 3-month extension. That's pretty common in the industry.
Yeah, if you're doing a very, very large renovation over $100,000, I definitely recommending pushing that you get a 9-month or 12-month term, because like what Vince is mentioning, sometimes these projects, especially with these large construction budgets, you get stuck in permitting. So make sure when you're negotiating with the hard money lender that you're giving yourself the appropriate amount of time.
Yeah, it's always a good idea to reach for that longer term if possible. Beyond getting stuck in permitting, maybe your contractor screws something up and a stop work order gets slapped onto your property. Suddenly he can't do any work until that's resolved, and that could take weeks or even months. So all sorts of things like that can slow the project down, and you should be ready in the terms of your loan to accommodate those sorts of problems. Other common terms are, typically appraisals are required. Some hard money lenders will allow for BPOs, especially on lower value properties, but most commonly it's going to be appraisals. And typically also you'll be charged for construction draw inspections. Most commonly they are sending out third-party inspectors, especially any of the national guys. And so those third-party inspectors typically charge $100 or $125. So you'll typically see that on a per inspection basis.
If you need to pay your contractors on Friday and they need to be paid right away, make sure to order those inspections and give your hard money lender enough heads up so that way you can pay your contractors when they're looking to get paid. So communicate that with the hard money lender. Usually with Barnett, how much heads up do you guys usually need?
So usually a borrower will tell us what day they want it. We have the inspector get out there. If the inspector goes out there in the morning, we can often fund on the same day.
Wow.
But if it's in the afternoon or they're a little late and getting the report back to us that day, it's probably the next day. Worst case, it's 2 business days later. But pretty much in all cases, we're funding the next business day. So the more important thing is just scheduling with the inspector, making sure he's available to get out there. If he can get out there, we can get it funded pretty much as quickly as 1 or 2 business days max.
Yeah, with most hard money lender terms too, you are going to have what are commonly referred to as junk fees. So these are going to be like processing fees, underwriting fees, closing fees, etc. So you kind of want to get, before you close on that loan or before you commit to a hard money lender, find out exactly, get a picture of what all the fees are you're going to be charged.
And the common thread through these fees, it's money in the lender's pocket that's outside of the rate and points. You know, they're just kind of little fees they tack on to try and milk some more money out of the process. They'll often justify it as we're covering our costs, or this costs something, so we need to pay for it. We need you to pay for it. But I mean, and the reality is, it's just all going into their income. We actually do not charge these kinds of fees. We prefer to just keep it clean and simple, and not need you to do complicated mathematical acrobatics to figure out how much we're charging you.
Yeah, sometimes you'll see, again, hard money lenders which might have a lower percentage rate that they're charging you in less points, but they're charging you tons of junk fees, and they're charging you on 100% of the rehab from day one, which actually ends up costing you a lot more money. And that's why having that loan comparison calculator is important. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a copy of that loan comparison calculator. See you soon.
Real estate agents are cheap. Many agents will only market your home on the MLS and put a sign up. Demand more. Joshua Ingalls invests in aggressive marketing, including high-def video, 3D virtual tours, professional photography, a custom website, and mailers, so you can get the most amount of money for your home in the shortest amount of time. Call Joshua Ingalls, broker with United Real Estate Chicago, at 630-544-1504 for a free home valuation, or visit HomeTeamIL.com to learn more.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim, or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. Now, back to the show with real estate info you won't find anywhere else. Real Estate Airwaves is on AM 560, The Answer.
We are talking about institutional money, in particular banks and hard money loans. This next segment, we're going to focus on comparing capital sources. This can be pretty tricky because they have different terms. So we want to enable you to make apples to apples comparisons of these variant terms that come across your desk when you're trying to find financing. Now, the lender comparison calculator that we're giving away today is a perfect tool for this, and pretty much everything I'm going to discuss below is covered by that calculator. So call us at 855-5-AIRWAVES or visit us at realestateairwaves.com, and the first 50 people who contact us will get that calculator. So there's basically two questions to think about when comparing lenders. One is, how much are they giving you, and how much does it cost? So on the how much are they giving you, that's called the advance rate. How much money are they advancing on your loan? The bottom line there is, the more they're giving you, perhaps the better it is, because you don't have to put capital in, but it's also going to cost you more because you're going to be paying interest on that higher amount. Conversely, the more you put in, the better terms you're going to get. So for instance, our typical program is 85-15. So that means we fund 85% of the total cost of the project, and you fund 15%. And on that, you can get our standard terms. Now, there's others out there who will provide even higher or lower amounts than that. Typically, when you get up to higher, like there are a few lenders in the market, they're rare and they're hard to work with often because they're getting a lot of risk, but they'll provide 100% financing. You're going to be paying in the mid-20s typically for that. It gets a lot more expensive when all the risk is on the lender.
Now, you talked about when you're giving 85% of the total cost. You got to keep that in mind. Again, most institutional lenders are only going to give you 75 or 80% of just the purchase price, And many times, that's why they're a lot cheaper than a hard money lender.
So then let's go into the next big question. How much does it cost? So this is really a question of the cost of capital. Now, what's the cost of capital? Well, it's rate. Well, no, it's not just rate. It's rate and a lot of other things. So you need to look at every single dollar you'll expend in association with obtaining that capital. So that includes rate, yes. That includes points, which is, as we discussed before, a percentage of the total loan. So if it's 1 point, it's $1,000 on a $100,000 loan. But then there's things like extension fees. If you know your project's going to take 12 months and the lender's only willing to give you 9 with an extension, you got to build that extension fee into your total cost of capital. Beyond that, of course, you've got junk fees. If you're getting charged a $1,000 processing fee on each loan, if your total loan is $100,000, that's another point. So you've got an additional cost of capital there. Beyond that, you need to think about things that are requirements for the loan that are also going to cost money. So many lenders will require appraisals. Appraisals in the Chicago area at least run $300, $350 on a single family home. So you need to build that in. And all these numbers will put together will be able to get you a complete cost of capital, a dollar amount that you can use to compare one lender to another. And that's what the lender comparison calculator that we're going to share with the first 50 people who contact us will do for you.
Yeah, you'll sometimes see really low advertised rates. But when you take into consideration the points, the extension fees, the junk fees, maybe they're only giving you a 6-month loan. I've seen some lenders out there which are giving you 3-month terms. These things really add up. So make sure to really look into, again, you want your lender to be fully transparent. So sit down with them and find out what are all these costs that are associated with the financing.
Yeah, do not be fooled by these low advertised rates. If you see a hard money lender saying, hey, we charge 12%, well, your next question is, and what else? Because they probably don't just charge 12%. It's interesting. Banks have this regulation called Regulation Z that requires them to disclose an APR. So you walk into your bank and you see they're advertising their mortgages, and it'll have an APR of X, and it's some number. That number builds in all the costs of capital so that you can make apples to apples comparisons. That's regulations protecting consumers. Hard money lenders don't have those same regulations, so they'll play games. They'll tell you, we're charging 12%. And your next question as an informed investor is, okay, what are the points? What are the junk fees? What are the things do I need to pay for to get this loan from you? The next big crucial question, which many, many overlook, is what is the interest charged on? So what that means is, are you getting charged on the full loan amount, or are you only getting charged on what's actually been used by you? So you can imagine, Josh used an example before of a $200,000 construction budget. Let's say it's a $100,000 purchase, a $100,000 loan at purchase, and a $100,000 or $200,000 construction budget. So you've got a total loan there of $300,000. But let's say you need to get permits. If you're sitting on that property for 4 months getting permits, let's say it's complicated permits that take 6. You do not want to be paying interest on $300,000 that whole time when you've only effectively put $100,000 to use. So this structure of charging interest on the entire amount, it increases the cost of capital greatly, and it's actually the most common practice among hard money lenders. We do the opposite. We charge only on amounts funded, and lenders like us who are rarer, they'll save you a lot of money even if it looks like their rate is higher or their points seem higher. You do the total cost of capital, you boil it down to that cash dollar amount that you will be paying to that lender for the capital they're providing, and this charging on only amounts funded saves you a lot of money.
Absolutely does. I've worked with other hard money lenders in the past, and some of the junk fees were something like setting up an escrow fee account, and I asked the hard money lender to provide proof that an escrow was being set up, and of course they could not prove that one was being set up because the matter of fact is that they didn't. So keep these things in mind, and that loan comparison calculator will help you compare hard money lenders and other various sources of capitals. The number here is 855-5-AIRWAVES, or you can visit realestateairwaves.com. The first 50 people to contact us will be getting a copy of that loan comparison calculator. We'll see you soon.
You're an investor, a lender in commercial real estate, or you're an attorney, and you use a title company. National Title Solutions wants a chance to be your title company. Give them a shot at your business, and you'll find out why they're the best choice. Most title companies keep banking hours and have no flexibility. National Title Solutions will do whatever it takes on your timetable. You'll save money, too. Give them an opportunity and see the difference. Convenient offices all over. National Title Solutions. Call 800-NTS-2700. 800-NTS-2700.
Need capital for your real estate investment? Let Barnett Real Estate Investment Finance be your partner for fast, flexible, and certain capital. Since 2008, they've funded millions of home flippers, landlords, auction buyers, wholesalers, and more. And they'd like their next deal to be with you. Submit your preliminary application now at barnettcapital.com/prelim or call them at 224-205-7266. Again, that's 224-205-7266.
AM 560, The Answer. It's all about making money with real estate. Now, back to Real Estate Airwaves on AM 560, The Answer.
Today we discussed institutional sources of money, namely banks and hard money lenders. We discussed some of the advantages and disadvantages of both. So, on the hard money lending side, you've got speed, you've got ease of use, you've got lack of credit score limitations, for example. They can fund construction, and it's just a lot easier to obtain than your typical bank financing. Now, on the other side of that, banks are going to be cheaper, and often significantly cheaper. The issue is you often can't get bank financing to get the deal done, which is why there's a niche in the real estate investment space for hard money lenders. We talked about what to watch out for when you're dealing with hard money lenders, namely fee collectors. Beware of large, upfront, non-refundable fees, because often these are unscrupulous actors in the market who are just trying to collect fees, and they may get you a term sheet, but it may not be that attractive, or they may not get you one at all. So be very careful with those sorts of actors in the market. Then we dove into banks and what it looks like to get financing from them, how they typically require a lot of the trappings of an owner-occupied property. They want to see the utilities on. They want to see appliances installed. Those limitations kind of make them harder to work with in the investment space. We also discussed how they typically will only fund the purchase price. They're looking on an as-is basis. So if you're looking to do rehab to the property, using a bank is going to be challenging. We talked about how if you're able to use a bank, the local banks who are more entrepreneurial are often going to be a better source than the big national guys. And we also talked about the possibility of using credit unions who can also often have similar flexibility. We dove into some of the typical hard money lending terms, how there's rates and points charged on many of these loans, how they're often charged on the full amount of the loan, but in some cases like ours, we charge them only on amounts funded, which results in significant savings. We talked about the terms of 9 to 12 months, the requirement for appraisals, how many lenders charge junk fees that you need to build into your costs. Then we talked about making apples-to-apples comparisons of capital sources, and that's our giveaway today to the first 50 people who contact us, the lender comparison calculator, into which you can simply throw the terms of two different lenders and see which one is actually charging you less in terms of total cost of capital in a dollar amount. One might be $2,000, one might be $2,500. You can make your choice much more objectively there than trying to base it off of rate and point. We talked about, being wary of advertised rates without knowing more, and that you as an informed investor can now go to them and say, okay, great, your rate is 12. Tell me about the rest of it. What are my other costs? And we talked about the crucial question of what is interest charged on. If it's charged on the full amount of the loan, regardless of whether it's funded, how you can end up paying a lot more than you otherwise would if it's charged only on the amounts funded.
Yeah, again, to contact us to get that loan comparison calculator, the first 50 people that get a hold of us will be getting a copy of that so that they can compare terms, rates, lenders. Also, that number is 855-5-AIRWAVES, or you can visit realestateairwaves.com to get a copy of that loan comparison calculator. I'd like to meet you this Tuesday, December the 6th at 6 p.m. We are going to have our monthly real estate meeting at 3009 North Kedzie in Chicago. and we meet at the VFW Hall there. You can visit fliptoriches.com for more info on that meeting. And we're going to be talking about how to raise money, and you might potentially find a private money lender there. You never know. Tune in next week. We're going to be talking about how to assemble your power team, and I'm going to hand over my team for you.
You've been listening to Real Estate Airwaves on AM 560, The Answer. Come back next Sunday at noon for more insider real estate information from Joshua and Vincent. You can listen to past shows, contact them, and get free exclusive content at realestateairwaves.com. That's realestateairwaves.com.